Hey, what's going on, guys? Leo. So we got to talk about the FOMC meeting because they've decided to make some changes that are kind of scaring the market. If you haven't noticed, everything seems to be crashing. So we're going to go over, is this a bad situation? And, is it end of the world, or is it a little bit more mild and everybody's kind of blowing it out of proportion? We're also going to take a look at the Ethereum trade. I'm going to update y'all. If you want to just skip ahead, if that's all you're interested in, go ahead and skip to the end of the video. But with that, let's go ahead and dive in. But before we do, hit that subscribe button. All right, let's get to it. So what do we know, right? So the CPI came in on the 11th, and it came in at 2.7. So it was within the expectations, but it was a little bit hotter. So if we look at the chart, you can see that, whoops, that's not the chart. So we can see that inflation is coming up just a little bit, but it's not out of the, it's not crazy. It's not really spiking. It's just kind of caught between this 3 and 2% range, which is the Fed's target, 2%. And if we look back, over the last 10, 12 years, we can see that this is an area that inflation kind of likes to hang around. So, I'm not all that surprised that we're kind of sitting around here, but that's not what scared the market. What scared the market is that the Fed came out and they basically said, hey guys, so we know that we've been saying that we're going to do 4 rate cuts in 2025, but now we're only going to do 2. The reason that's a big deal is because that pulls a lot of liquidity out of the market, and a lot of, especially small businesses, small companies, they leverage debt in order to grow and expand. So what that means is that it's going to be a little bit more expensive for them to do that. So markets are always forward looking. So what's happening right now as we're starting to see the market pull back is they're adjusting for 2 rate cuts in 2025 as opposed to 4 rate cuts. Now, the Fed, they change their mind all the time. The Fed says that they will make rate cuts in accordance with the data that comes in. So they might be saying that they're only going to do 2 cuts now, but so let's say that inflation were to drop to 2% for some odd reason in the middle of, let's say 6 months down the road. Well, I would expect that they're going to increase the rate cuts then because they can't afford to pay the interest on the national debt. Every time they increase interest rates, it costs them more money, and they can't keep doing that indefinitely. So is this really the end of the world? No. It basically what happened was we had some unexpected news come out that the monetary policy isn't going to be as loose as we thought it was going to be. I still expect 2025 to be an incredibly good year, and this is a great buying opportunity for anybody looking to load up for assets going into 2025. Speaking of, let's take a look real quick at the Ethereum trade that I updated y'all on. So if we go back to my video, this was from, 8 days ago. You can see here that I was expecting that we completed a 3rd wave and we're going in for an ABC correction. So if we come over here, that's exactly what we're doing. Now, the B wave actually went up a lot higher than I thought it would have gone. So this is most likely some sort of a flat. So I have orders laddered in all the way from 33.75 all the way down to the 50% retracement here at, what is that? That's 30. I front runned it. So I'm 31. I believe I put them at 31.20. Yeah, 31.20. So I've got orders there, and I have them going all the way up to the top of this green box here at 3,400. So some of them have already gotten filled, but I expect us to bounce here. Coming over to the right side, you can see that you have this high volume node here, where I've got this blue line. Volume drops off. That means there's not a lot of price acceptance there. So I expect price to start turning around. If it doesn't, and if it does start moving back down, then I expect it to move very quickly through the 3280 level all the way through that low volume node because there's not much price acceptance there. So it's going to want to move very quickly into an area of price acceptance. And then our next high volume node is here. And then volume drops off again at, we'll call it 3,050. So that's really the low end. I do not expect it going below 3050. Just not going to happen. You have a lot of support there. You've got the 200 daily moving average. It's just not going to go through there. So likely we're putting in a 4th wave. Also with one of the guidelines within Elliott wave is that the 4th wave will retrace within the territory of the lower degree 4th wave. And that lines up exactly with the 3050 level. So I wouldn't be surprised if that's where we go. With that said, that pretty much wraps up this video. Probably won't have another video until the beginning of the new year. So I wish you all a Merry Christmas, Happy New Year, Happy Holidays, whatever you may celebrate, sending love, and hit that subscribe button, and I'll talk to y'all soon.